How to invest in growth stocks. Before we get started, if you're new here, make sure to hit that subscribe button below and turn on the notification bell so you never miss our latest content. What is growth investing? Although you can grow your money through receiving any type of return on your capital, such as interest payments from a certificate of deposit, CD, or bond. A more specific definition of growth investing is the pursuit of increasing one's wealth through long or short-term capital appreciation. Growth investing is typically considered to be the offensive portion of an investment portfolio, with the defensive portion dedicated to income generation, tax reduction, or capital preservation. When it comes to stocks, growth means that the company has substantial potential for capital appreciation, as opposed to value investing, where analysts feel that the price of the company's stock is trading below where it should be for reasons that are likely to change in the foreseeable future. Independent investment research company Morningstar classifies all stocks and stock mutual funds as either growth, value, or blended growth plus value investments. Understanding growth investing. Growth investors typically look for investments in rapidly expanding industries or even entire markets where new technologies and services are being developed. Growth investors look for profits through capital appreciation, that is, the gains they'll achieve when they sell their stock, as opposed to dividends they receive while they own it. In fact, most growth stock companies reinvest their earnings back into the business rather than paying a dividend to their shareholders. Strong stock performance. In general, if a stock cannot realistically double in 5 years, it's probably not a growth stock. Keep in mind, a stock's price would double in 7 years with a growth rate of just 10%. To double in 5 years, the growth rate must be 15%, something that's certainly feasible for young companies in rapidly expanding industries. Popular types of growth investments. A few main categories of assets have historically shown the greatest growth potential. All of them involve equity in some form, and they usually come with a higher level of risk. Small cap stocks. The size of a company is based on its market capitalization or net worth. There is no exact, universal definition of what is considered to be small cap compared to micro, mid, or large cap, but most analysts classify any company with a capitalization of between $300 million and $2 billion as a small cap firm. Companies in this category are usually still in their initial phase of growth, and their stocks have the potential for substantial appreciation in price. Small cap stocks have historically posted higher returns than their blue chip cousins, but they are also considerably more volatile and carry a higher degree of risk. Small cap stocks have also often outperformed large cap stocks during periods of recovery from recessions. Technology and healthcare stocks. Companies that develop new technologies or offer innovations in healthcare can be excellent choices for investors who are looking for a home run play in their portfolios. The stocks of companies that develop popular or revolutionary products can rise exponentially in price in a relatively short period of time. For example, the price of Pfizer PFE was just under $5 a share in 1994 before Viagra was released. This blockbuster drug took the company's stock price to above $30 a share over the next 5 years, thanks to FDA approval of the drug in 1998. On occasion, a growth stock can go on a wild ride. Streaming media company Roku, ROKU, surged in the months after its initial public offering, IPO, in the fall of 2017, only to retreat towards the closing price from its first day of trading just a few short months later. Speculative investments. Thrill seekers and speculators look to high-risk growth instruments such as penny stocks, futures and options contracts, foreign currency, and speculative real estate, such as undeveloped land. There are also oil and gas drilling partnerships and private equity for aggressive investors in high-income brackets. Those who pick the right choices in this arena can see a return on capital of many times their initial investment, but they can also often lose every cent of their principal. Researching growth stocks. There are several key factors that must be considered when evaluating investment growth. The rate of growth, the amount and type of risk, and other elements of investing play a substantial role in the amount of money that investors walk away with. Return on equity, ROE. ROE is a mathematical expression of how efficiently a corporation can make a profit. It is quantified as a percentage that represents the company's net income, which in this case means the income remaining after the preferred stockholders have been paid but before the common stock dividends are paid, divided by the total equity of the shareholders. Increasing earnings per share, EPS. Although there are several types of EPS, and the amount of money earned on a per-share basis does not tell a whole story about how a business is run, a company whose earnings per share are increasing over time is probably doing something right. Investors often seek companies that have an increasing EPS, but further research should be done to ensure that the EPS numbers are the result of genuine cash flow from legitimate business dealings. Projected earnings. Many day traders and short-term investors pay close attention to projected earnings announcements because they can have both immediate and future effects on a company's stock price. In fact, many investors make money trading earnings announcements. For example, when a company's projected earnings come in higher than expected, the stock price will often rise quickly and then trend back down in the following days. But consistent positive projected earnings reports will help the stock to rise over time. Growth investing is a complex subject that is often closely coupled with other subjects such as fundamental analysis, technical analysis, and market research. There are many more growth strategies used by individual and institutional investors, and a complete listing of them is far beyond the scope of this video. For more information on growth strategies for your investments, consult your broker or financial advisor. Trade on the go, anywhere, anytime. One of the world's largest crypto asset exchanges is ready for you. Enjoy competitive fees and dedicated customer support while trading securely. You'll also have access to Binance tools that make it easier than ever to view your trade history, manage auto investments, view price charts, and make conversions with zero fees. Make an account for free and join millions of traders and investors on the global crypto market. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to Fatty Daddy Reviews for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. We love hearing from you. Thank you for watching.